Several months later.
Trời ơi bão táp
Later.
One. The overview of bank loans. Types of business loans. Working capital loan, a self-liquidating loan, designed to support ongoing business operations. Plus typically short-term. Plus occur on a frequent basis. Term loans, primarily used to finance the purchase of fixed assets such as machinery. Direct lease loans, alternative to term loans, informal line of credit. Revolving credit loan.
2. Loan participations.
Some large corporations wish to borrow a larger amount of funds than any individual bank is willing to provide. Several banks may be willing to pool their available funds in loan participation. One of the banks serves as the lead bank, arranging for the documentation, disbursement, and payment structure of the loan. Other banks supply funds that are channeled to the borrower by the lead bank. 3. Loans supporting leveraged buyouts. A management group or a business relies mostly on debt to purchase the equity of another business. Firms request LBO financing because they perceive that the market value of certain publicly held shares is too low. 4. Types of consumer loans. Installment loans, provided for individuals to finance purchases of cars and household products. Provide credit cards to consumers who qualify, enabling them to purchase various goods without having to reapply for credit on each purchase. 5. Real estate loans. For residential real estate loans, the maturity on a mortgage is typically 15 to 30 years. The loan is backed by the residence purchased. Commercial banks also provide commercial real estate loans, such as loans to build shopping malls.
2. Some problems facing bank. 1. Pressure to raise deposit interest rates and lower lending rates. 2. Apply digital technology to compete, keep market share and expand business. 3. Narrow the gap between deposit growth and credit growth. What effect will the bank's loan problems have on the Vietnamese financial system? Risks of the banking sector. If the basic functions of financial intermediaries, the money-generating function, the payment intermediary function and the credit intermediary function, are interrupted, it will affects the function of financial markets, causing economic activities to stall, affect financial stability and economic development. 1. Purchase without liquidity. A major goal of a bank loan is to lend to people who do not have ready cash. A bank loan can help an individual or a business in buying something as simple as a car or a home, or it can help businesses to buy machinery or set up big units for which it doesn't have money.
2. Driver of growth. Bank loans are major drivers of growth, especially for public and private sector companies. 3. Better interest rates. Systematic and organized bank loans are offered to borrowers with minimal interest. 4. Flexibility. Bank loans provide an element of flexibility to the borrower, which can be very beneficial in long term. 5. Ownership remains with the borrower. Bank loans can be a great source of funding for companies. 6. Interest rate risk, cost of capital. For such large and long-term projects, the offered rate is usually a floating rate. There is a very important assumption about their cost of capital over the life of the project. At a floating rate, this assumption becomes floating. The economic situation when interest rates rise, the cost of capital will also increase, and that can make these projects unfeasible.